Ladies and gentlemen, good day and welcome to the Vijaya Diagnostics Center Limited's Q1FY2024 earnings conference call hosted by JM Financial. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectation of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Ms. Cinderella Carvalho from JM Financial. Thank you, and over to you, ma'am.
Thanks, Carol. Good afternoon, everyone. I'm Cinderella Carvalho. On behalf of JM Financial, welcome you all on the Q1FY2024 earnings Concall of Vijaya Diagnostics. At the outset, I thank the management of Vijaya for giving us this opportunity to host a Concall, and looking forward to have an insightful interaction on the quarterly earnings and the outlook here onwards. Today, from the management team, we have with us Ms. Suprita Reddy, Managing Director and CEO, Mr. Narasimha Raju, Chief Financial Officer, Mr. Sivarama Raju, Head Strategy and IR. I now hand over the call to management for their opening remark.
Good afternoon, everyone. On behalf of the management team of Vijaya Diagnostics Center Limited, I welcome you all to this forum. I would like to first share the key highlights for the period, following which Mr. Narasimha Raju will take you through the operational and the financial highlights of the quarter ended 30th June 2023. I am very happy to share that we witnessed a healthy first quarter of the fiscal. We recorded a 19.2% year-on-year non-COVID revenue growth, supported both by contribution from new centers and improved performance in existing centers. Business from the wellness segment grew to 12.4% from 9.6% of the revenue in comparison to the same period last year. The B2C segment continued to stand strong at 95%. Moving a step ahead towards our resolve for continued strategic expansion, we inaugurated an advanced and futuristic hub center in Kolkata, West Bengal in July 2023, marking the achievement of a major milestone in our growth journey. The Mammoth facility has a fully automated laboratory and houses the best of equipment such as a 3 Tesla MRI and a 128 slice cardiac CT, apart from the range of other sophisticated equipment. Vijaya is the first to introduce such high-end services in the whole of North Kolkata. We are all geared up to make the most of this opportunity that the Kolkata market holds in store for us. Another noteworthy achievement during the period was the accomplishment of an operational break-even of our hubs at Tirupati in just 3 months from the commencement of a full-fledged operation. This stands testimony to the fact that the market presents huge demand for quality diagnostics. It also reinforces that as a brand, we were able to gain the trust and belief of our customers over the years, which in turn is enabling us to perform successfully even in new geographies. Our recently launched hubs in Panjagutta and Rajahmundry have sustained growth and improved over the months in terms of business performance, in providing superior diagnostic services, and in consistently offering an enhanced customer experience. As an organization, we believe that skilled resources play a major role in steering business and the processes in the right direction, and therefore we always ensured we hired suitable resources much ahead of time. In the light of our extensive expansion plans from time to come and to further strengthen the leadership team, we have appointed Mr. Seshadri Vasan as Chief Operating Officer, who brings with him vast experience of heading businesses across various verticals, especially healthcare. In conclusion, I would like to reaffirm that our expansion efforts will be guided by intelligent research and identification of potential markets. We will continue to expand sustainably in years to come. With over 4 decades of expertise in the diagnostic space, we we trust that we as a brand have all it takes to cash in on the opportunities that lie ahead and use it to create lasting value to all of our stakeholders. I would now like to invite Mr. Narasimharaju, our CFO, who will take us through the operational and the financial highlights for this period.
Thanks, Madam. Good afternoon and warm welcome to everyone joining us on the call today. I will briefly take you through the specific operating and financial performance for the quarter ended June 2023. The consolidated revenue for the quarter stood at 121 crore as against 104 crore in the corresponding quarter of the last year, achieving an overall year-on-year growth rate of 16%. And when it comes to the non-COVID revenues, I am happy to share that it has grown at year-on-year growth rate of 19% from 101 crore in Q1 of last year to 121 crore in the current quarter. This non-COVID revenue growth was entirely driven by volume growth of 20% year-on-year, that is an increase from 21.76 million tests to 26.18 million tests. This significant growth in non-COVID business revenues was driven by both radiology and pathology segments, underscoring the robustness of our B2C-focused integrated business model. The B2C revenue share, just like every quarter, stood healthy at 95%. Our radiology business stood higher at 37% as compared to 36% in Q1 of last year. The revenue per test was 461 rupees and revenue per footfall was 1,540 rupees during this current quarter. EBITDA for the current quarter was at 48 crore compared to 40 crore in the corresponding previous period, registering a year-on-year growth of around 20%. The EBITDA margin was healthy at around 40% in the current quarter. The profit after tax, the PAT for the current quarter, stood at 26.4 crore and the PAT margin was also healthy at 22%. The cash and cash equivalents as at the quarter end were 280 crore as against 256 crore as at the end of March 2023. To conclude, I would like to say that the company is optimistic about the ongoing progress and remains confident in delivering consistent performance in the future. This brings me to the end of my address. I would now request the moderator to open the line for the Q&A session. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question-answer session. Anyone who wishes to ask a question may press star then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Before we take the first question, I'd like to remind all participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The first question is from the line of Prakash Kapadia from Anived Portfolio Managers. Please go ahead.
Yeah, thanks. Couple of questions from my end. Wellness share has been inching up for us. Is that a conscious strategy at our end, or is it, customer requirements which have changed? And, in the wellness side, what is the range of products we have in terms of packages, in terms of pricing, and also, are these repeat customers who do these wellness tests from time to time? Is now the app working or these are center walk-ins? If you could give us some sense on the wellness side. Secondly, on the Calcutta market, what is, the revenue we are targeting in the next 2-3 years, and who would be the top 1 or 2 players there? And thirdly, had the depreciation policy not been changed, the PAT would have been more like 20.5 crores, right? These were my 3 questions.
So Prakash, like we've mentioned earlier, the concept of Vijaya was an integrated center from its birth in 81 to have both radiology and pathology, everything under one roof. And from the early 80s itself is when we have packages, wellness packages. So Dr. Reddy's always believed that prevention is better than cure, and we've been having this from the early 80s. over time it has evolved, it's changed, and it's more organized probably for lifestyle diseases below 45 years. There are various kinds of packages now. But if you ask me, the trend of the package growing is also because of the thought process and the clientele, the age group, the education level, a lot of things adding to that. So especially after COVID, we've seen an increase in number of people coming in for regular health checks. And when it comes to pricing, we have packages starting from as low as 450 rupees, going up all the way to about 18,000 rupees. And everything starting even from your 450 rupees will have a combination of both pathology and radiology, which is the beauty of the integrated model itself. And the dense network created in this home market is what is driving these customers to walk in and get these packages done. And that's also been a go-to-market strategy that wherever we see a dense housing coming up, that's where we open a spoke center. And those spoke centers are actually acting as the centers that are generating this wellness business coming in. And to answer your second question, Kolkata, like I've mentioned earlier, is a market that we are looking at to make it as a home market in the next 4 to 5 years to come. There's a lot of room for us to grow in these home markets of AP and Telangana for the rest of the 3 to 4 years. Simultaneously, we wanted to create a stronger base in a second market, which is why we started the first center in Kolkata now, which will slowly grow. And obviously, after probably 5 to 6 years, I would love to say that we would want to be number one, but that's not something that I can comment on right now. And when it comes to PAT, I would like Raju to explain that to you, please.
Hi, Prakash. The current profit after tax is approximately like 26.5 crore. Okay, if you would like to do an apple-to-apple comparison by replacing the SLM method of depreciation with WDV method of depreciation, the adjustment is approximately like a 5.9 crore. The number you told, 20.5 crore, is approximately, that's the number that we will get. So that will get translated into almost close to like a 16 to 17% year-on-year growth in the profit after tax. But I would like to highlight one point. In the last year Q1, okay, the major hubs like Tirupati, Rajahmundry and Panjagutta were not there. Whereas in the current quarter, these three hubs are there. Because of the integrated model, we have seen that faster ramp up at these centers, and then we achieved an operational break-even. So in this current quarter, the EBITDA is at a break-even at these three centers. So when you look at the PAT level, okay, if you consider the WDV depreciation, it will be again, that will be an impact will be there on that PAT. So if you exclude the WDV impact of these three major hubs in this current quarter, the year-on-year growth on the PAT level, it will be approximately like 30 to 31%.
Sure. And just a small clarification on the Calcutta foray. Historically we've seen, companies operating south try to go, west, or companies operating west trying to go south. There is, already a leader, number 2 player, number 3 player in most of the markets. It's very difficult to, make some meaningful sales or dislodge, the number 1, 2 or 3 player in that market. So on the Calcutta market, what, gives us, the hope or belief that we'll be, the number 1 player? What is the thought process there, if you could just highlight?
So Prakash, if you actually see, Kolkata is also a large metro just like any other market. If I have to just take example of Hyderabad, right? Vijaya being for 40 years now and say being leader in this market, but under Vijaya you still have so many other integrated players who are generating about 1/5 or 1/6 of our size, right? So this itself shows that there will be room for a new player to grow in any of the market. But what differently we will take is the technology and the medical skill, where we are banking on. So for a player like Vijaya, obviously, yes, in the given time, what we believe is that, we'll slowly start inching the market share. And our target is to become, leader of that market at some point. So that's the target. But yes, it will take some time, and there is a fair possibility to reach to the target.
Sure. Thank you. All the best.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Jainil Shah from JM Financial. Please go ahead.
Hi, thank you for the opportunity. My first question is on the centers that we've opened this quarter. Can you please quantify it, and which other hubs are we planning to open now? We have Gulbarga in mind, and we had one more planned hub. So if you can call out.
So the upcoming hubs, Mr. Shah, would be Mehboob Nagar and Gulbarga, and there would be a few more hubs coming up, and those leases are signed. We'll be probably in a better position to give you those names in the next earnings call.
So those hubs will come in FY25 or FY24 end once we have clarity?
In
FY24.
In FY24.
So, Jainil, so we just launched one of the hub in Kolkata, and we are going to launch Gulbarga and Mehboob Nagar in next 2 to 3 months. Right. So, and if you see, the plan was to open minimum 4 hubs a year. So we are on track for that plan.
Okay. And just that, we've been guiding for mid-teens growth consistently. Last quarter we were in our 20s. This time around it's around 19.2%. So is the current exceptional growth rate coming from the Panjagutta, Rajmundry, and once they're in the base, the growth will kind of slow down, or it'll, your guidance is conservative?
On the guidance, we would say we would grow in line with the market, but Mr. Shah, what happened was last year we also opened close to about 29 centers. You was also seeing a lot of ramp up happening from all of those centers plus existing mature centers. And of course, Panjagutta is a state-of-the-art futuristic center, probably doing a little better than the other hubs because of the technology itself. But that is also what we would be seeing in the centers that are yet to open. So Gulbarga is going to also be a very high-end center for that geography, and Mehboob Nagar would not have a state-of-the-art center like Vijaya in the nearby vicinity at all. So keeping that in mind, and the 15-center growth that we say with a combination of both the hub and spoke and growth coming in from the new centers and existing centers, we would definitely grow in line with what we have committed earlier.
Okay. Thank you so much.
Thank you.
Thank you. A reminder to the participants, if you wish to ask a question, please press star, then 1 on your touchtone telephone. The next question is from the line of Rahul Javani from IIFL Institutional Equities. Please go ahead.
Yeah. Hi, ma'am. Thanks for taking my question. Ma'am, the growth which we have seen on volume side this quarter, which is around 20%, that seems to be the growth on test volumes. And given the increasing share of wellness business as well as our integrated model, our number of tests per patient would continue to inch up. So can you also quantify the non-COVID volume growth in terms of patient volumes?
So Rahul, so I think roughly last Q1 of FY23 we had about 50,000 footfalls who have just come for COVID test alone. Right. If we just exclude that from the base, I think the growth of footfall is also in double digit. Just to tell you, see, in a B2C business, obviously, you've seen that revenue, the driver of the revenue is the test volume growth, and obviously in a B2C business, this test volume in turn will be driven by the footfalls. But just because we are comparing the wrong basis, it looks like little low. But otherwise, if you exclude this COVID effect, it's in a double-digit growth is what we had in footfalls. And one more point to mention is that the digital initiatives we have taken. So there were few inefficiencies when coming to sending a patient to different centers for different services then. But now in the new software, so we are able to pay a single bill to a patient, and he can still go to 2 to 3 centers and get different services done. For example, somebody has a bunch of blood tests which he has to give in fasting, and also say advanced radiology test. He can still get a single bill done at the spoke, give his blood test, and then go to a hub for his MRI scan. So with all this, the volumes look little low, but otherwise it's in a high double-digit growth.
Okay. So last year the number was 50,000 on COVID patient volume. So what would be the number for this quarter? Because this quarter, I know this quarter the number would be low, but if you can just call that out as well.
After netting off that, it is close to 49 to 50,000. So this quarter it was about close to 5,000, but not all these patients are just who have come for RT-PCR. So if you actually see the net effect is 50,000.
Okay, net effect YOY is 50,000. Yeah, sure, sir. And ma'am, on this Tirupati center which we added, we seem to have achieved EBITDA breakeven quite quickly as compared to what played out in Rajahmundry and Panjagutta. That Rajahmundry and Panjagutta took us 2 to 3 quarters to achieve EBITDA breakeven. So what has helped us in the Tirupati market that the breakeven was achieved so quickly?
Rahul, we cannot compare the Panjagutta to a Tirupati because it's not apple to apple. See, the technology and the equipment and the facilities that have gone into both of these centers are absolutely different, and those are decided and dependent on what that particular geography requires. So Tirupati is a center which has only a gamma camera and no PET-CT, and you see a high-end PET-CT sitting in Panjagutta. So probably the ramp-up time is a little higher, but Panjagutta is equally, I think, doing very well in terms of its footfalls and numbers. And Tirupati, of course, there is, I do not know if it shared it with you the last time. It is a very, very high-end 3 Tesla MR we took to that region, just like Rajahmundry. And we clocked in doing very high-end cases, and all of the cases that come in are specialized cases. And this is where our backbone of our 120 consultants sitting across geographies, reporting these cases, ramped up and accelerated that growth. So a case that was having to travel all the way to Chennai is now getting tested in Tirupati itself. And the system has actually flown in well, and that region is now ready to take on a couple of spokes in the coming quarters.
Okay, so ma'am, any plans in terms of number of spokes which you intend to add?
So Rahul, like we mentioned earlier, the 15 centers annually, what we had planned is in line and will happen this year too. It's just that it might vary in time in terms of quarter to quarter, or the number of hubs versus number of spokes, but 15 centers is well planned out for, and that will be done by the end of this year itself.
Sure, ma'am. Last question from my end would be on your Calcutta center which you put up. So, can you call out in terms of what are the initial trends which you are seeing in that market, let's say in terms of patient feedback, and the number of spokes which you now intend to add around that large hub center in Calcutta, and the time which it would take for that center to achieve EBITDA? Yeah, thank you.
I would say that we just opened it in July end, Rahul, so it's pretty quick probably to comment on the newest baby to the entrant, but the response has been extremely good. In fact, better than what I would have expected for first Vijaya Center in West Bengal. And normally, whatever we look at as a break-even in our home markets, I would say, being a region outside of the home market, we would have to give it a quarter or two extra for a break-even to happen. And in terms of response, it's doing well, in line with what we had expected. Probably would not like to comment on the numbers right now.
Sure, ma'am. So then at Calcutta as well, you would be targeting EBITDA break-even within a 12-month period?
Yes, absolutely.
Yeah. Oh, okay. Thank you, ma'am. Thanks for answering the question.
Thank you. A reminder to the participants, if you wish to ask a question, please press star, then 1 on your touchtone telephone. The next question is from the line of Ashita Jain from Nuvama. Please go ahead.
Hi, good afternoon, everyone. So I have just one question on the Kolkata. So ma'am, you mentioned Vijaya is the first one to introduce such high-end technologies in whole of North Kolkata. So could you please talk a bit about your competitors in Kolkata in terms of these technologies, their size and organized market play, just to understand that market better?
It is a metro, Ashita, so there are a lot of integrated players and pure path players, pure radiology players. But like I mentioned, in North Kolkata, where we chose, we are an independent diagnostic center with no other center offering a 128 cardiac CT, a digital mammogram, a 3 Tesla in-bore experience, wide variety. There are about 36 coils that machine has. So again, what we look at is doing more specialized work. The backbone of the company, again, the teleradiology playing in, and the high quality reporting. So that's our differentiator. When we do go to a new geography, we go in with the best, and we definitely say quality is what we bank on. So, and it's a market where we want to grow slowly. It's not that we are saying we will open 10 to 15 centers in Kolkata alone. It's a market that we plan to make it ready after the next 3 to 4 years, and by which time we get a strong brand recall like we do have in Andhra and Telangana now.
And how has been the response from the doctors?
I'm so sorry to interrupt. May I please request you to speak a bit louder? Your audio is not clearly audible.
Is it audible now?
Yes, ma'am. Thank you.
Yeah. So just the last one. How has been the initial response from the doctor's side?
Sorry?
How is the initial response from doctor's side?
Till now, whatever we have done, the feedback has been absolutely wonderful, Ashita. There's any new center that comes up, initially we do see that it is a little radiology high in terms of high-end investigations coming in. So we've had absolutely wonderful feedback, and that is also a reason why we feel that the operational break-even will happen in the first 12 months itself.
Okay. That's all from my side. Thank you so much.
Thank you. A reminder to the participants, if you wish to ask a question, please press star, then 1 on your touchtone telephone. The next question is from the line of Cinderella Carvalho from JM Financial. Please go ahead.
Thanks for the opportunity. Ma'am, if we look at our ramp-up of the newer hubs, what is the vision in your mind to take these going ahead? Because even if we target 4 to 5 hubs a year, we have bunched up a lot of hubs recently, and in our earlier discussion has highlighted that, the way these hubs are, then you and the spot. So the growth understanding will remain to be in a double-digit, higher double-digit growth range going ahead.
Cinderella, there is some disturbance in your...
They're not able to hear you.
Am I audible now?
Not
better?
Clear, Cinderella. Not clear.
Ma'am, may I please request you to use the handset?
Let me try. Is this better now? By any chance?
I'm sorry, ma'am, your audio is not clear.
Okay.
This is a reminder to all participants present in this conference. If you wish to ask a question, please press star, then 1 on your touchtone telephone. I'd like to remind all participants present in this conference, if you have a question, please press star, then 1 on your touchtone telephone. The next question is from the line of Saloni from Value Investment. Please go ahead.
Hello, am I audible?
Yes, ma'am.
So my first question is, ma'am, we recently opened 3 hubs in the past 2 to 3 quarters. So can you just help me with the sequential growth from these new centers?
So, Saloni, if you actually see all these centers are ramping up month on month. So, but if you see last year to current year, if you take all the centers that we opened in the last financial year, I think out of the 19% growth, roughly around 7 to 8% growth was from the centers that opened in last 1.5 year, and the rest, 11 to 12% was from the older centers.
Okay, that's it from my side. Thank you so much.
Thank you. I'd like to remind participants, if you wish to ask a question, please press star, then 1 on your touchtone telephone. We take the question again from the line of Cinderella Carvalho from JM Financial. You may please go ahead, ma'am.
Hope I'm audible now.
Yes.
Yeah. So if I see our hub centers, like, we have done a bunch of hub centers in the last year, and now we have a plan of 4 to 5 more hub centers upcoming in this year. So if we see this, the spokes that will follow these hub centers should drive a double-digit, high double-digit growth for us. Is this understanding clear, or you see any changes to this thought? Can you help me understand this?
So, Cinderella, yes, as you rightly said, year on year, this will help us in growing. But the other thing to note is obviously the base also will be going up, and we are a B2C, diagnostic chain. So, as what we are confident is delivering that, 14 to 15% kind of double-digit growth, at least for the near future.
But in the near term, it should be slightly faster, and before it settles to the mid double digit. That's what you're trying to say?
So it changes quarter to quarter, Cinderella. So one quarter you may see a little higher, one quarter you may see almost in line with what we are guiding.
Okay. And ma'am, you said that now being on the Kolkata side, you were giving us some color of the market, but we understand that this market is not new to us, and you've been there for a very long time. Yes. So what do you expect in terms of overall size that you can, or a portion that you can achieve of this market over 2 to 3 years time? Not something immediately, not from a starting perspective, but what is your thought process of this market, specifically the Kolkata market? Given that
thought process or the vision on that market, Cinderella, is to make it as large as the home markets of AP and Telangana over the years to come, because we probably would have, say, another 3 years of time to take over Andhra and the rest of Telangana and the adjacent geographies. By which time we would like West Bengal as a region to be ready for us to create a dense network like how we have created here. So probably I would not have a number right away to give you in terms of centers, but as and when we see opportunity in this region, we continue to grow. And this is something that we are getting ready as a phase 2 for growth of the company over the next few years.
That's really helpful. And any plans on the inorganic side? Are we evaluating anything? What is the sense with the new...
like we've mentioned earlier, we've always been evaluating. We never let go of an opportunity, but there are certain things we do look at in terms of value, brand recall, quality of the asset, a lot of things. And most importantly, not being unreasonable in terms of valuation. Until and unless it makes some sense to us and it's meaningful, probably we would definitely do it. Right now, I do not have anything concrete that I could comment on, but we are definitely always open to looking at opportunities.
Very helpful, ma'am. One last one from my end, and that is how is the local, if we look at our strong hub, Hyderabad and the AP Telangana market, what is the competitive scenario that you're seeing right now? What versus the last year, if you could just give us some color?
Competitive scenario has always been the noise. It's always been the same on ground, like I mentioned earlier, so it hasn't made much of a difference. So I really don't have anything concrete to say that there is a new competitor. The market is same. The unorganized players have not increased probably, but are all scattered. It's all there. Lot more noise than what is actually on ground level. We've not taken any price cuts. We've not taken any increase in pricing. Nothing has changed.
Okay. And just a follow-up, and do we envisage to take some of the price increases, at least in the specialized tests that we do? Do you see the scope for that?
There's always an addition of tests that happens in life. It's not something that is planned as and when there's a requirement. It's always been that about 20 to 25 tests on an average get added every quarter. So this is need-based, and the categorization of normal to specialization is a very, subject where there's no clarity on. So if you look at the test menu, it continuously keeps growing, and that is what is making the company do that combination of tests, right? It's not just the routine work coming in. So I would not be able to quantify it, but there is an addition of tests that happens almost every quarter.
Okay. Thank you so much, ma'am. Thanks a lot.
Thank you.
And all the best.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. Participants, if you wish to ask a question, please press star then 1. The next question is from the line of Rahul Javani from IIFL Institutional Equities. Please go ahead.
Yeah, thanks for taking my follow-up question. Ma'am, can you highlight what are you seeing in terms of competitive intensity from the online space? So although we don't get impacted much because of our integrated model of radiology, but anything which you can call out in terms of online competition, and some of our peers had taken price increases towards beginning of this year. So had we also taken price increases on our portfolio?
So Rahul, yes, we have taken price increases on few tests, but I think that will only contribute to 1% of our revenue. So we have done on very few tests.
That is because of the input cost increasing. That is why you see that 1% increase, Rahul. And in terms of online aggregators, they have never created an impact, hardly contribute to less than about 1% of our revenues coming in from them. There's a lot more noise than what happens actually on ground zero, just not because we integrated, but also because I think patients or customers prefer having that feel. Healthcare is that personal touch, the customer experience, and that's also the reason why you see that strong brand recall in the home markets is because they're visiting centers. Home collection per se during COVID did about 3% at its peak, whereas even though today we try to push our customer base in our home markets, today home collection hardly contributes to about 1.2% of the revenue. So that gives you a clear example to say that they prefer coming to a center. They do like coming to a center, the personal touch. They have a favorite who they would probably want them to collect the sample on, and that's been a strong, I think, acceleration for us to open more spokes in this market. So definitely not too much to think about aggregators from our point of view at this time.
Sure, ma'am. And ma'am, one of the pharmacy players in the Hyderabad market also was trying to scale up their radiology model on back of aggressive discounting. So has that player seen any significant traction to have impacted our business in any meaningful way?
I would say that none of those competitors have probably dented anything that is coming to us because we've seen a healthy growth. Probably I would not be able to comment on the model of their business, but we've definitely not from him, from any other aggregator or an unorganized player, we've not seen too much happening in this space.
Okay, sure, ma'am. Thanks for answering my questions.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference back to the management for closing comments.
I would like to thank everyone for attending this call and for showing interest in Vijaya Diagnostics Center Limited. I hope we've been able to answer all of your questions. Should you need any further clarifications, please feel free to reach out to us. Thank you once again for taking time to join the call, and see you all next quarter.
Thank you.
Thank you. On behalf of JM Financial, we conclude today's conference. Thank you all for joining. You may now disconnect your lines.